Hello. So, okay, today, or this video, I'm gonna make a video about my Forex strategy, right? And my NAS strategy is basically pretty much the same thing, just on NAS, from 8:30 to 11 when I want to trade NAS. Usually being Fridays, if I trade Fridays, because most Fridays I don't trade. But let me just grab the right tool. No, that's not it. So my strategy is basically a liquidity sweep, a displacement, right? After that liquidity sweep, and then a break of that of the high or the low, and then you draw a fib on that, and then from there you wait for retracement into those fib levels, and then you put your stop loss where the fib says, and if there is, you know, not huge fair value gaps, or specific types of fair value gaps or order blocks or breakers, and you can extend the clip because there is liquidity, buy side or sell side liquidity, then so on and so on. But that's the more advanced part. So I'm just gonna start drawing, right? So price action, right, and then right is whatever, and then here we have a liquidity sweep. So this is the liquidity sweep, right? Then we want a displacement like this, right, which breaks the high that caused this liquidity sweep, right, which also one could say caused this break of structure, right? And it doesn't really matter how far it goes, right? And then from here, you draw a fib from where the liquidity is to basically the high of the displacement. That's not like a total high, right? But just the high of the displacement. I'll show an example of what I mean, the high of displacement, right? And if you watch my other stuff, I kind of vaguely go over it, right? But yeah, and then from there, you just kind of wait for a retracement into either 6.2 level, 7.8 level, or 7.86 level, right? And sometimes it might go lower, and that's because this exact same thing is happening on the 5 minute, right? So again, those levels would be lower, of course, because usually I do this on the 15 minute. As you can see, I'm on the 15 minute chart, right? Up here. So yeah, but then it just comes in, and then from here, it could take 40 minutes or a few hours. And if the market is in a huge consolidation area, then it can take like eight hours. I've been in 8 hours trades. It is insane. That trade eventually hit in Tokyo session, but I closed it in Sydney session because Australian session because I just don't like the price action there. And sometimes it gets really suspicious, and you have just extremely news-like wicks in Sydney sessions, and yeah, so I just didn't want to hold it anymore, and I was tired of sitting behind my computer looking at charts for 8 hours, so I just closed it. But this is basically it, right? And there's maybe a order block here, there's a fair value gap, sometimes there's a breaker somewhere here, right, within this movement or so on, right? And it retraces into those, sometimes there's a unicorn, whatever, right? And you always want to mark those out just so that you can see, right? Because once it enters those levels, you can go even like on the 5 minute or the 3 minute and just see how it's reacting to that level. Because on the 15 minute, it's kind of harder to see. I mean, it's easier to understand the reaction once the candle is done forming. But as the candle is forming, you might FOMO and think that from this fair value gap right here, right, you're just gonna go, right, or the market's just gonna move. Where is the thing? Here we go, right? If let's say there's a fair value gap here, right, and then it comes into this and gives us a tiny reaction, right? So if I and then it just kind of comes into this area, right, and it gives it a little like reaction, a second tap, another reaction, and then continues down, right? My point is, what I was trying to explain is that you want to, mark these out, but you also want to go into the lower time frames so that you don't get FOMO'd into entering and having a smaller risk reward just because you got FOMO because you refuse to go on lower time frames and see the actual reaction, right, and what was actually happening, if there was a breaker structure or so on and so on, right, or if the fair value gap is you know smaller, bigger, whatever on those time frames, right? And if that area, which is like a 15-minute order block, right? That one, and I'm gonna just hypothetically draw that too, right? Saying it's something like this. Yeah. So sometimes it's like this because the low is actually the low of the bullish candle. Sometimes the low is the bearish candle that grab liquidity. But liquidity is liquidity, right? And then I just make this green. That's my rule. Green boxes, auto block, yellow boxes, fair value gap, right? Right? And then so on, right? And then you're like, oh, okay, this is like there's like a bunch of fair value gaps on the 5 minute or 3 minute here, right? And there is still is an auto block, right? That is kind of like half of this box on the 3 minute or 5 minute. So I'm just gonna wait for this retracement because this actually, you know, then when you see that, you realize that okay, this price action here, this is just FOMO. This is a fake out, right? This is smart money, convincing the new guys or the support and resistance people that oh we're gonna bounce off this, right? And then it doesn't, and it goes into the order block because they need to fill in their orders, and also there's this fib, and also so on and so on, and it's liquidity and it's near liquidity and so on and so on and so on. You get the point, right? And then you make the money, right? But yeah, so this is how to not get FOMO. This is like a random lesson I just gave. I don't know why, right? But okay, so we come here, right? This Monday, this is, and I usually don't trade Mondays. If you watch the video I literally posted before this, I usually don't trade Mondays. That may be subject to change, but I usually don't, right? But okay, so what do you have? We have price action, right? And then we have this candle comes and grabs this liquidity, if you will, right? Or this area, right? And does it? No, it doesn't, right? But also perfectly taps into a fair value gap here. And if we go into lower time frames, then that fair value gap will look more juicy, right? But so what I would do, and this is a Monday, I usually would kind of do it like this in like London price action, London session price action. But this is Monday, and Mondays usually don't give us an entry on London price action, which also means I will have to wake up earlier, or you know, just get on the chart, wake up around the same time and just skip my morning routine and get on the charts faster, right? But okay, right? So this would be this Monday, right? Boom. And I'm only gonna show GU examples because that's the only thing I trade, or the only forex thing I trade. And I'm not gonna do NAS because NAS I'm still testing that on back testing software. So just wait for that one, okay? But yeah, you can see, right? And then if we're to do auto blocks and such, right? Then here is auto block, right? Which we tap into, and give me another rectangle. There isn't really fair value gaps, not on the 15 minute, but if we go on the 5, maybe we get something, right? Nope, nothing, right? But I mean, maybe someone could say that this one candle or these two candles are a breaker. I don't know. I'm not good at seeing breakers. Just gonna be honest. I'm not the best person at seeing breaker blocks. Oh, you have a fair value gap. Ah, then that makes this a unicorn, or at least makes it stronger. In my head, that makes it a unicorn because there was also liquidity sweep here, right? So yeah, you have a fair value gap. You have an order block. That's like honestly, that is like superpower, supercharged, superpower, turbocharged price action, and you can kind of see that, right? And if we go back on the 15, or sorry, 5, okay, let me go 5 first, right? This is quite clean price action. I'm not saying that because we have an order block and fair value gap, but that does give further confirmation that there more likely will be clean price action. But also the other thing with this Monday, and I can just quickly talk about dollar index, but I'll go over that quickly later, right? And I also did go over that in the last video, which literally covers this price action and trade analysis or market analysis. I didn't trade this, right? But we're not in a, so if we go on the like 1 hour or 4 hour, we're not really in a consolidation range, right? Right? There is, yeah, okay, fine. There's a fair value gap here, right? Bullish fair value gap tapped into, but this is the price action that will make that fair value gap, which is here. I'm not gonna draw it. You know what? Fine, I'll draw it, right? Which will create turn this fair value gap invent. So fine, yeah, there's a reaction, and then yeah, it goes up and taps, and then eventually fully covers and fills this fair value gap, right? But what I mean by we're not in a consolidation area, right, is ideally a 4-hour fair value gap here, right, or where the TP is. Both of those aren't necessarily that great, right? Because if there's a huge 4-hour fair value gap here, right, and now you really have to use your imagination, right? You just have to imagine that there's a 4-hour fair value gap right here because this is our order block, right? If you can see it, you can see it, and I'm hovering over it now. That's our order block, right? Meaning that's our optimal trade entry, OTE, if you will, right? If this is price action, then I'm not super confident in the trade because who knows? Maybe the market makers want to come into here and then push down, right? And then it's like then the game changes, and I'm like, oh, it's a Monday. There's a consolidation, or we're in a consolidation esque area. There's a huge 4-hour fair value gap. I don't know what's gonna happen. I'm just not gonna trade because I usually don't trade Mondays, right? That's an example, right? That's the example of what I mean. And sure, yeah, you can say okay, 1 hour, right? But 1 hour it does create consolidation, but you can see that consolidation was dealt with in Sydney and Tokyo session, if you will, right? And yeah, the fact that this was created also like this, break of structure and multiple breaks of structures, and just like a bearish trend on lower time frames, right? This also turns this into an invent. So this is an invent 1 hour fair value gap, which is even more confirmation for the trade, right? But if these two candles didn't exist and didn't fully fill in and disrespect, if you will, this 1 hour fair value gap, then I wouldn't be very keen to be trading this, because then I'm like, okay, consolidation, I don't know what's gonna happen, right? Maybe the market makers want to come into like these areas, if you will, right? Who knows, right? I mean, this is the strategy is very tight, but on Mondays I'm a bit more on my toes, if you will, right? But yeah, as long as this fair value gap is broken and is turned into an invent fair value gap, right? And now you can even make this fair value gap smaller, making it less significant, right? Right? But as long as even the 1 hour one is disrespected and basically turned into an invent fair value gap, and my price action says this, and my fibs and order blocks and fair value gaps and so on say that, then it's pretty tight, right? So you always want to have your eyes also on the higher time frame, right? Let me go on another example. Also, I don't trade Fridays. Fridays you never get anything on GU, right? And I'll just quickly show you an example, right? So I mean, even if you do the, I mean, to where, which displacement, right? This movement, right? Okay, fine. If you're gonna play that 30-minute price action, but again, we go down on the 5 to do that, right? That's a different thing. I usually don't like playing the 5, unless unless it's like a Wednesday or something. Wednesdays I like to play 5 minute. Do this exact strategy on the 5 minute, basically, right? But Friday, 15 minute, this would be how I would draw my fib, right? And because we need to wait for this candle to fully form before looking for an entry, that means that we never get get an entry from this candle, right? So the only thing you could really do is get an entry at a 36382 level, sorry, right? And yeah, sure, but it's news. This Friday was a news day. I don't remember what, but I remember it was a news day. And if you look at this 15-minute candle, you can tell that it's a news candle, right? And sure, extendo clip, and I think there was a fair value gap here, right? And I was just wondering if it's gonna, disrespect it and turn it into an invent, but there was a 4-hour fair value gap or something like that. I don't trade on Fridays. I don't trade on Mondays usually. But yeah, news, don't trade it usually. Almost always skip it. Some news are like, even though they're red folders, it's like it's low. It doesn't do much for GU, right? So I'm like, oh, okay, I could risk it, but then I'm risking half of what I would do on that day, right? Which is usually half a percent or 1% if that day is the type of day that I will risk 2% because I've been having winning trades, right? And that's just risk management basics. But this Tuesday is an interesting one because sometimes, again, these are like the nuances I learned trading my strategy. Sometimes you take it from kind of the low, not the liquidity, but from the low. Because this is beautiful liquidity, right? On higher time frames. This is just an obvious, run on stops or liquidity, whatever you want to call it. Whatever, is more correct, I don't know. But to me, liquidity is liquidity. Liquidity and run on stops, they look the same, right? But this Tuesday, again, I didn't trade this Tuesday. You can go watch the video, right? I did not trade, right? But this would be it, right? And then maybe on the 5 minute. Yeah, let's check the 5 minutes on this Tuesday. Let's check the 5 minute. Where is it? Here it is. Okay. Yeah, 5 minute there would be no difference. The low would be the low, right? But your entry would be at like 8 o'clock if you're really wanting the 786 level, right? And also you're in there for a few hours, right? So yeah, it's like the nuance that I have trading this strategy. Sometimes you don't take it from the liquidity. Sometimes you just take it from the 15-minute low, right? But yeah, let's go back. Let's go back. What was I didn't trade this day either, but I remember the analysis I did. Again, you can go watch the video. This was it. No, sorry, it was this, right? So because in my Notion journal, right, two bullish candles on the 15-minute means the end of the displacement, right? So this would be it. You would get an entry here around 7:45, between 7:30 and 7:45, and you would be you would be in a trade for 3 hours, right? And this is why fifth I much rather eventually just end up doing it either on NAS or on the 5 minute, because on the 5 minute, exactly this amount, this many candles, moving 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 times 5, that's like on the 5 minute, a 15 candle trade. This is just stupid. This is just stupid stuff. But on 5 minute time frame, a 15 candle trade, that would be 50, about an hour and a half, right? So half the time, right? And if you do it right on the 5 minute, then you're in and out in 45 minutes usually, right? And then we come to this Tuesday. I remember I traded on this Tuesday, and this Tuesday I actually calculated my loss wrong, and what ended up happening is that instead of making $600, I made $60. Money's money, but it kind of sucks when that happens. So yeah, entry at 7:30, right? And then this one actually doesn't take too long, right? But and yeah, this one's kind of hard, but and yeah, this is equal highs, or this is almost equal highs, and the more you zoom in, the less equal high it is. So it looks like equal highs, right? The more compressed you make the price, that looks like equal highs, right? But if you zoom in or go on lower time frame, that's clearly a run on stops style liquidity. I don't know. Is run on stops also a liquidity sweep? Someone please tell me. I know it's a thing. I just don't know if you can call them the same thing. Run on stops slash liquidity for this in the definitions of my strategy, right? And then you grab the fib from right here to, yeah, basically this, right? And sometimes I would do equal highs, right? So I would take these two candles and be like, okay, just the median high, right? And I would just do that, and this would just, make my trade last like 5 minutes less, and make my entry just a little bit, push my entry a little bit higher, or okay, I don't know if it it makes the price target, move a little bit, which then gives higher chances of me actually getting entries at 786 level, right? But no matter which high I choose on this displacement on the 15 minute, 1 hour and 30 minutes, right? So yeah, 1 hour and 30 minutes. So yeah, right. So that's basically the strategy, right? And this, like, what happens here is not too important because it's usually Tokyo and Sydney. There's not a lot of movement. There really isn't really any fair value gaps that get formed, right? But it's the order blocks and fair value gaps that get formed as London session opens, and it's like in between London and Tokyo, right? That's where the real price that you want to pay attention to is, right? And as long as you can see a liquidity sweep and a displacement, grabbing a high of sort, right? Then it's all good. It's all good, right? Because I, looking at this price action, would look at these three candles. I'm just gonna remove the fib. Oh shit. These three candles, right? This is one down movement, right? So if we were to go to line, then you can see that those three candles are just one down movement, right? Meaning, to me, this is just bullish price action because you have to understand this is a wick that was all the way down here, so right? So at some point, this entire, up to like exactly where my mouse is hovering, used to be a fully black body candle, right? And someone thought that we were going to keep going lower, failing to see the liquidity sweep, failing to see the run on stops, and they put a sell order. And smart money and ICT people, we saw what was really happening. We saw the manipulation, for the towards or on the what you call them retail traders, and we saw the liquidity sweep, and we're like, okay, boom, 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 and this is GU, and this is how GU moves around these hours, and so on and so on, and boom, 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 and yada 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 yada. Someone could scalp this. But what I'm saying is, if someone a scalper could see the run on stops and the liquidity sweep here, they can scalp this and be in and out. I'm not a scalper. I know I have a friend who's a scalper. Does not matter. This is a Monday, and yeah, in the video I posted right before this, yeah, I think I drew this, right? And usually I would draw it like this, right? And yeah, you can say this is not really a liquidity grab, but this is a displacement, right? And you can also draw this, right? It's still the same thing. It's just, you know, this becomes your stop loss, this becomes your entry ideally, and this becomes your TP, right? Right. So, for the sake of getting a better RR, I go from this low, right? And as I've explained, sometimes you take the low, not the liquidity. You take the low of displacement from the liquidity sweep and not the liquidity sweep. This is just personal experience, right? And then you take this and then you fuck with it, right? And then yeah, you can get an entry at 3 a.m. Good luck, right? Monday. Again, usually it's not like this. Usually it would be in, fully London session that I would draw the fib. But again, Mondays are a special case, right? So again, you just wait, 7 o'clock. Okay, boom. After 7, you get an entry, valid. Boom, here. Maybe this was a news day. I don't know. Could one extendo clip? One could extendo clip to this London high, right? And for viewation and explain and all of that, I will actually put this here, right? Simulate as if I took this trade, right? So this would be, right, almost 5 RR. This would be where I will close half my position if I'm going to extendo clip, right? Because sometimes I just don't mind bother extendo clipping, right? I will close full all of my position if I'm not gonna extendo clip. If I am, I will close half at this negative 27 level, right? And if I'm going to extendo clip, then the rest of the position gets closed here, making it a 9. And again, I think I literally showed this on the last video I posted, right? And we can continue. I can continue, right? And I can also, do all of this on what was called FX replay, right? And then show you guys also those stats. But I've done that before. I know it in my head. So with daily bias is also super important with this strategy. So and I forgot to say that you can do this without daily bias, right? But then your winning rate or your success rate is like around 60 to 70, right? Depending on the month or the season, aka being 3 months, quarter, right? Depending on the quarter or the month, right? It's between 60 to 70, right? And as long as you can get a 708 entry, right? Then you have around what was it? Was it 4 or was it 3? RR? No, 3 RR, right? And you are very comfortable with a because anybody that has seen, and I'll probably put a picture here in edit, but basically how risk reward works, if I remember correctly, when it comes to a 3 RR system, you only need 40% success rate, right? But yeah, I realized that without daily trade, it's between 60 to 70 success rate, assuming you don't trade on Fridays ever, right? And if you add daily bias, then it goes up to like 80, 85, depending on the month and the season, session, quarter, right? So daily bias is also super important, but yeah, you can do it without, you can do it with, but you're more likely to actually win your trades, using daily bias, right? But this. Now I think this was a bullish day. I think. I'm not sure. And this is just an example of a day. I'm pretty sure I remember this day. I did not make money this day. This was a losing day, right? So I would draw something like this. Wait for an entry. I got stopped out, right? So happens, and then it goes in the direction. But I'm not. I think I remember this day. It was the day where I only needed $7 to like be above. Maybe I'm not sure. Was it? Yeah, I'm not sure, but yeah, I remember this day I lost, and I was kind of mad, and I was like, it's going in my. I was like a little bit later, I came in. This candle was already formed, and I was like, oh, it's going down. Oh, should I? And I was like, no, you know what? That's revenge trading. I'm not gonna do that. But this Wednesday, I do remember this was a $600 day, right? Boom, 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 right? And then again, for better entry, you can always do this, right? Boom, and this or this, right? You can also do that, right? Because I'm like, okay, this tree, right? What is the equal median like high, right? And I just do that because this doesn't really change. It actually kind of saves you because if price action, decides that it doesn't want to go the last 2 pips to hit your stop loss, right? Doing something like this would help you, right? And also it would help you on entry, but it might fuck you in the stop loss. But that's why you don't trade Fridays and Mondays usually, or I don't, right? This is Tuesday, right? Same thing, either from here to here or here to here. Though this one you never get a tap in, and I apologize for drawing that. So price action would have been this, or the fib would have been this, and then de-risking by taking this, or this one. Not really different, but yeah. And then entry doom, and I think I remember this date. I drew the fib on the 5 minute and I was like, so the fact that it's coming all the way down here makes sense because on the 5 minute the fib's 786 level or 786 level is like right there. So just quickly, yeah. So taking the exact same criterias of that strategy, and this video is getting boring. I know. I'm gonna end this soon, and quickly just talk about DXY, right? Taking this, right? Okay, okay. Still displacement, displacement. This area, this area is kind of where the displacement ends, right? Because after that we have a breakout structure, right? So this is forming the entire time. I'm waiting for 7 o'clock because I enter after 7 o'clock, right? Or I more prefer to enter after 7 than 5 minutes before 7. But usually when there's an entry before 5 minutes before 7 o'clock, there's usually one 5 to 10 minutes after 7 o'clock, right? But on the 5 minute, right, I would do something like this or like this, right? I think I actually did exactly this, right? And then what do you know? All this huge retracement and possibly run on stops on a 1 minute or something, or 30 seconds, because it kind of looks like it. I don't know, but this price action does line up with this 786 level. I remember this, so yeah. But that's basically it, and I'm quickly just gonna cover DXY. I think DXY. Okay, so to people that trade futures, like even if they trade oil, they still look at like NAS and S&P just to see what the market is doing because they're kind of intertwined, if you will, right? And it's the same with the dollar index, right? So, right, I'm just gonna reset this chart, right? So if the dollar index is going up, then that means that all the forex pairs, as far as I'm concerned, maybe there's some special ones, special cases, I don't know, but ideally, and from what I remember, all the forex pairs would be bullish. So as long as dollar index is, sorry, bearish. As long as the dollar index is bullish, all forex pairs are bearish, and vice versa. If the dollar index is bearish, then GU is bullish, right? So that's just like an overall view, if you will. Right? It's just like it's intertwined. So if this is going up, then that means that the pair I'm going to be trading is going down, right? And that's just something nice to look at, right? And again, I kind of went a little bit more crazy explaining that, or a little bit more in depth explaining that in the video I uploaded right before this. Now you know my strategy, and back test it, of course. See if you can do it on the 5 minute, if you're more comfortable doing it on the 30 minute. But this is just my strategy. I like to let people know what I do. I like to be transparent, and yeah, I hope listening to me analyze the market as semi-professional as my analyses are. I hope at least you learned something, and yeah, it was useful to you.